Hello friends. Hi, my name is Partha. Welcome to my channel Nifty Trails, a place where you get daily analysis on Nifty using a 3D method, price, volume and delivery. Before we go ahead, many people ask me why the name is named as Nifty Trails. Trail is something is a path that is left behind, so whenever a person walks. So what I see is in the charts, Nifty leaves every day some trail so that we analyze that trail and be prepared for the next day. So that's the reason I named it as Nifty Trails. Moving forward, today's analysis, before we go ahead and see the details, let's first go through the disclaimer. Moving ahead, contents of this video. In this video, after the market has ended on 27th of July, 3:30 p.m. in India, global markets also made certain moves. So what we first do is analyze the global markets, what happened, and then analyze the Nifty movement in three dimensions using a price in the sense using a technical analysis and using volume, that is VWAP and VMA indicators we use, and also we use OI data that is published in NSE website around 7 p.m. every day. So we pick up that data, we analyze that, and then we also analyze the delivery positions that NSE publishes on its site, and we apply certain formulae on this open interest and delivery to keenly understand in depth what various participants are doing in the market. What I mean participants are FIIs, DIIs. FIIs are the foreign investors, DIIs are the domestic institutional investors, mutual funds. Clients means you and me, those retail as well as HNI, high net worth individuals. And last but not the least, that is proprietary firms within India who have been trading in the market. So all these four participants would have taken certain positions by which we will analyze their positions to come to certain conclusions. So third, once we get these two data, we will club Nifty analysis and global financial market movements and individual sector analysis, positioning how they are positioned, and then come to conclusion and be prepared for the next day. Please note this is only for educational purpose and it's not a recommendation from my side. Moving forward, first let's go through the today I'm going to share with you a screen where I will be comparing US index and Indian index NSE with S&P 500 US index. So this is a 4-hour chart that I am sharing with you of US markets on the left side, and the right side you have Nifty 50. What we will do is first let us zoom out to see what has exactly happened in the last 3 or 4 months. You see a channel that has been formed where support is taken at the arrow marks and the resistance is taken at the flags that have been marked. Once this channel has been breached and it went up to 3250, again came back and largely trading only in the channel. That is the first observation. Second observation is in the last 1 month or so, that is from 26th June, it is not touching the lower end of the channel, but rather it is forming a base at a higher level. So if you see here on the 9th of July, S&P 500 has not come down to 3045, which is the lower end of the trading channel, but it has actually taken support at 3100 itself and then made a new high. Uh, I mean swing high. Whereas where it touched and made a third double top, many people thought, and so it made a ferocious fall. But even after a ferocious fall here in 4 hours, sees this big candle, it has not broken and touched 3060. It not even came close to this. Again, it formed a double bottom here at 3120, and from then onwards it has been respecting this upward sloping line, which is far steeper than the other one. So where we are currently we are trading from last 2 days, that is about 8 4-hour candles, that is 32 hours of trading. What we are largely done is we are trying to see whether this steeper line will it hold for the third time or not. Currently, it is a bit moving upwards, but currently it is near the steep line. So what are the possibilities? Say for example, possibility 1, 3196. If it breaks, then we will move to the next support level, that is the either either a lower trend line or the previous support, that is 3120. For that to happen, 3196 has to break. Remember, trading is not about preempting a move, it is about following a move. So we don't preempt a move that 3196 will break here at 3222. Rather, we will wait and we will see. I mean, this is hypothetical. We don't trade S&P 500, but I'm just explaining from a trader's context. And if the up move continues, as I shown you the trend line on the upside, it can go up to 3300 as well, which is the uh, and on the all-time high for S&P 500, which is at 3390, that is roughly around 3402, that I've put it on the pink line. So that could be a positional target for at least for now, it looks, once this 3288 breaks. So for now, what I would suggest is stay long because we have not broken the trend line. We should stay long, we should be bullish till this 3196 breaks on the close. And if it holds, who knows? We can go to 3300 and 3400 as well. If so, the risk is just about 20-30 points, and the reward is about 70-80 points. So, staying bullish gives a much better risk reward ratio currently. Now, let us see how Indian index NSE has been performing. It has been largely following, maybe here and there it would have missed a day or two, but it has largely been maintaining a similar trend line channel and an upward steeper line here, as shown here, the upward marks where we have also been maintaining a steeper upper line, and but we have not broken the upside trend channel that has been marked with flags where the resistance has taken. Now, if we zoom a bit, what is the interesting thing is from last say 4 to 8 hours, 8 candles, that is about 32 hours, we have been repeatedly taking support at 11,100, 11,050 to 11,100 largely, and then we are somehow able to sustain above 11,100, I would say, on a closing basis every day. We have never closed below 11,100 till now. That is the first observation. Second, if you see the steeper line where the S&P 500 is trading closer to this line, whereas we are actually maintaining certain distance. We see here the trend line is coming at 11,050 or so 40, but we are actually above it, no? And but we have closed week, so we have to see how it opens tomorrow and how US markets performed overnight. Next, moving forward. Now what we will do is, it has been largely, I would say largely from technical side, it is largely in a range of 11,200 to 11,050 from price perspective. Now the second part is seeing the OI data. So let me share a screen with you where the option chain analysis that is done is being shared with you. What we see on 30th July options data is at 11,200, there are about 38 lakh call writing positions, call OI. OI is built up. Why should we conclude it as call writers? Why can't we conclude it as call buyers? That's a interesting question. Let me answer that. So, who is more powerful or resourceful in the market? Is it call buyer or a call seller? A call buyer only pays the premium for that. Say for example, here at 11,200, the premium is 55 rupees. So 55 into 75 is 3,000 rupees that maximum a call buyer can lose. Whereas a call seller has unlimited risk. So if he's knowing that there is an unlimited risk, he is still selling at 55 rupees, means he has certain gumption, or I would say some certain um, you know resources on his side as well, where he strongly feels 11,200 it will not go upwards of 11,200. Remember, a call buyer is always a bullish, a call seller is bearish. Similarly, a put buyer is always bearish, whereas a put seller is always bullish. So when we see call positions, we assume that call writers drive the market here, and similarly on the put side, put writers drive the market because they have more to lose. One who has more to lose is, if knowing that if he's taking that position still, we assume he knows something more than the one who is buying, right? And he has more to lose as well. So he is more resourceful than the buyer. So option seller is always more resourceful than option buyer. And now if you see at 11,200, you have 38 lakh OI that is built, which means almost that's a strong resistance on the upside. If that breaks, then 11,300 where you have 28 lakh OI that is built. What we see is today there are about 12 lakhs that are added on 11,200 and 5 lakhs added on the 11,300. So together it's about 17 lakhs were added. That's what I mentioned in the first point, that 39 lakhs were added at 11,000 that will act as immediate resistance. Together 11,200, 11,300 is the resistance on the upside. Now, if you see on the put side, the maximum OI put that is there on the put side is about 41 lakhs at 11,000. That has slightly decreased by 242 lakhs only today. So important observation is, in spite of market having a ferocious move from 11,200 to 11,080 in first 1 hour, only 5% of the entire OI at 11,000 has decreased from 40 lakhs to 43 lakhs to 41 lakhs, not even 5%. You see, and that's the important observation. And the next one is at 10,900, you have 19 lakh OI that is built up. So what we can conclude is market is in a tight range of 11,000 to 11,200. 11,000 you have 41 lakhs, 11,200 you have 38 lakhs on the call side. So if either side breaks on the closing, that is important, on the closing, you can expect a sudden move on either side, on that particular side where it breaks, or a trending move that can happen. Because we have been moving up from many days, where we have been trending for many months, what we can expect is a sudden move, but rather than a trending move. Sudden in the sense, in a day you can move 150, 200 points rather than slowly inching 50 points every day upside or 50 points every day on the downside once you break these levels, 11,000 and 11,200. So what should be the mantra for tomorrow? Be watchful. 11,200 on the downside, 11,000 on the downside, 11,200 on the upside. Be aware of the support and resistances, how is OI built, and be open for any possibility. You need not have a presumption in mind that it would move in this direction only. Let the price tell you once it opens tomorrow, but have a view based on the data that I am sharing here. Now moving forward, so till now we have seen movement of price, movement of OI option chain analysis, and the third part is the volume, or I would say market participant analysis. Let me share that with you here. So this is the market participant analysis that I do every day. What I've done was this data which I captured here for various participants. I capture this from NSE website. I apply certain formula here, and then I apply certain formula here, and then I draw a pivot to understand what each participant is doing. Let me first go to FII data. What you see observe is on 27th you have increased the net long position. So what this pivot is, it's an future index net long to net short ratio. So if it is greater than 1, which means longs are more. If it is less than 1, which means shorts are more. So the index has increased from 1.04 to 1.17. Then this ratio means FIS have been bullish. They increased it almost 10 to 12%. If you see on the other side, This is interesting. A short put to short call ratio. A short put, where I mentioned in the previous option chain analysis, is a short put is a guy who is shorting the put options, means he is bullish. Short call is a guy who's shorting the call options, means he is bearish. So short put by short call ratio gives you, if it is more than one, means more short puts are there, means bullish. If it is less than one, then it is bearish, where there are more calls that are shorted than more puts. So what you see here is more puts that are shorted. The number has largely been the same, 1.35 to 1.34. It has not changed. So nothing that we can infer. Similarly, a long put is a guy who is bearish, and long call is a guy who is bullish. So this ratio gives you the bearishness in the market, and this also has not increased, which means the option data is largely neutral for FIIs and futures data is bullish. That's what I have mentioned here. This is the summary page where there is an increase in 1.04 to 1.17. Options data is largely neutral, and this is the data that we got. So let us now see the news that we got over the weekend. First thing, we got two bad newses, negative newses. One is ICICI Bank missed its estimates for quarterly results that led to a stock plummeting 6%. The second news, negative news, is RBI came up with an announcement that NPA can rise up to 14% or whatever it is. I don't go into those details, but and we say largely it's a negative news. So we had Bank Nifty that has fallen very sharply. Now you see this data. When large Bank Nifty that has fallen sharply on the negative news, FIs have increased their net longs in index futures. Isn't that interesting? Tells you something, right? Why are they increasing? If you see the cash market positioning, they sold 453 crores in cash market. We don't know what they sold, but they largely sold only 453 crores. On a day when they where they aggressively sell, this number goes above 1500 to 2000 crores. So now moving forward, DIIs, they decrease their longs from 0.32 to zero point 0.3. DIIs have been bearish in this market from last 2 weeks. If you see, I will show you here. They have largely decreased from zero point 0.6 to almost zero point 0.3. They have been bearish in this market. They are selling their positions. Is there something to worry about? Let us see. So DI is sold in cash market about 977 crores. So they have been net bearish in the market. Now let us see how clients that are you and me and HNIs are positioned. We have largely in index side, we have largely decreased our net longs from 1.17 to 1.05. So we have sold, clients have sold their positions, FIs have bought those positions. Simple. And I'm not going into index options index because largely both have decreased in same direction they moved, which means that longs have decreased, shorts have decreased. So there is nothing to infer. So end of the day, what we can assume is clients have largely been bearish in the market. Now, sorry, this is not neutral in the market. I would say they have turned slightly bearish in the market. And now moving to pros, that are proprietary firms, they have something interesting. Proprietary firms, what they have done was they have increased their net longs. If you see just the futures data, you will be shocked to see, wow, they have increased it 33% from 0.96 to 1.33 net longs. But the proof of the pudding or the interesting fact is not just in seeing the futures data, see the options data. Short put to short call ratio has decreased from 1.32 to 0.87. So short puts have been closed, which means they have shifted their bullish positions in from options to index. So there is really nothing to, you know, be surprised positively that pros have built positions in futures. They have closed all their net short puts that are bullish positions in options and open those bullish positions in the index. This is the reason I say we always need to see data together with index, futures and options and delivery, because all three combined gives you a holistic picture, not just one technical analysis or based on price or just the option chain analysis or just the market participant analysis. So once you combine all three, now you what you understand is they have largely been neutral. So in summary, what I have written was currently from technical analysis we see Nifty has been in a tight range where banking was underperforming.
Auto, cement, and IT are have outperformed market today. Since banking NPA problems which are well published and well known, this decline is not a surprise to big players. That is indicated by the bullish index net long positions by FIIs. While news is bearish, market has remained in a range even after a violent fall from 11,200 to 11,080 levels in the first 1 hour on today. So no player has gone drastically bearish or sold their positions. So that's what you understand. Of course, the AIs have been bearish, but they have not gone berserk and sold 2000 crores on cash market, right? And even the other players have not been really bearish. They just 10% they have reduced. FIs have increased it by 10%. So no player is cornered in this market. FIs are pushing the prices higher, even in global markets, even in Indian markets. So hence the summary for this can be distilled as we need to be maybe remain bullish in the market. Hence I would buy close to 11,100 levels with a hard stop loss at 11,050. If 11,200 is taken out, then I would add one more or double my Nifty position to 11,150 as a stop loss. The reason is market has always been sideways for 5 trading sessions till now between this tight band of 150 points. If it breaks out either side, it can give a good move. My view based on this data is that we can be bullish at lower levels, and since global markets as we analyzed are maintaining a bullish tone and S&P 500 is largely in the channel where it is, we can cautiously be bullish on Maruti, which has shown relative strength today. TCS, which has outperformed market. Interesting observation is cement is outperforming the index. Ultratech you can be bullish, and Infosys as well, which has outperformed, you can be bullish. Bullish in the sense you don't have to buy right after the market opens. I would wait for some dip, wait for some consolidation if not dip, so that the risk reward ratio is in my favor. I would remain neutral on banking and NBFC, and RIL I would remain neutral because it has steeply increased and it has to consolidate for new buyers to come in. Remember folks, risk management, money management and trade management is the key. Have this view in the market and take positions accordingly with knowing the risk that you are taking. Thanks for watching. I think I have explained in detail for those people who have said they are not really getting few things like OI and volume analysis. I hope this makes it clear for everyone. I'll be coming up with everyday analysis like this so that you get a better picture of the market and a holistic picture. Thank you. Have a nice day.